Good morning, Josh Masters here. Today we're going to talk about a little thing called lender's mortgage insurance. And one of the reasons this has come up is because yesterday my client miscalculated their purchasing figures by about $20,000, which is a massive amount that they have to come up with now. One of the reasons this happened is because they didn't allow for what's called lender's mortgage insurance. And this is actually an insurance for the banks in case you default for anything borrowed above 80%. So if you go to 90 or 95%, the bank will ask you to pay lender's mortgage insurance. Now, to give you an idea of how much this might cost, on a $500,000 property for about 10% down, which is borrowing up to 90%, it might be about $6,500 that you have to pay. If it goes up to 95%, then it jumps quite significantly to about $13,500. Now, a lot of people will look at this cost and think, that's not something I want to wear, I don't even get the benefit from it. However, I see it a little bit differently, and I consider it the cost of doing business. And let me explain this. If I put 20% down, which is an 80% lend, I will have no lender's mortgage insurance to pay. And on a $500,000 property, this might cost me $100,000. Now, I can split this and take $50,000 by putting that down as a deposit, which is a 90% lend. For the privilege of doing that, the bank's going to charge me $6,500. However, I now have the extra $50,000 that I can take somewhere else, and I can actually put it into another deposit. Or if I was to leverage more, up to even 95%, out of that $100,000 that we had originally, I might only have to put $25,000 down as a deposit. We can then use that $75,000 somewhere else, and for the privilege of that, we have to pay lender's mortgage insurance. So sometimes these little extra costs, even though they look like they're straight out of your pocket, it's actually the cost of doing business if you're looking to maximize your dollars and build an investment portfolio elsewhere along the way.